You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 23rd day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast each trading day. That's our live training room, and it is reserved for members only and those who are taking their 1 week free trial. If you have not taken your 1 week free trial, go to mytradingiq.com, and at the top of the page there's a link that says 5-day free trial, no credit card required. Just click the link, fill out the registration form, make sure you get it right, hit submit, and if everything goes right, same day we'll get your desktop set up, get your indicators indicating, and then your trial will start the following day. Now you're thinking, tomorrow's Friday, so the week's already shot. Don't worry about what day of the week or weekend or hour of the day you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. So signing up today on a Thursday means your first day will be tomorrow, Friday. Saturday and Sunday don't count against you, and there are some markets that don't sleep over the weekend. And then you'll get 4 days next week, Monday through Thursday. So really you're turning a 5-day trial into a 7-day trial. Now, when the live training room ends each day, you take a 30-minute break, come back for the afternoon broadcast. This one, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's a couple different ways to join the afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click that link, fill out that 30-second registration form, and you're done. What'll happen, every trading day going forward, you'll get an email about an hour before the broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to catch up later. You can do both of those with our YouTube channel, youtube.com/CFRN. It's easy to remember because you already got the YouTube part memorized, so just remember CFRN. Not only do we broadcast live on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. And just pick some days at random. Doesn't matter. Just pick a day. Watch a little bit, fast forward a little bit, pick another day, do the same thing. Pick another day, another year, do the same thing. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Let's open with our daily devotional and a word of prayer as we do every day. Now, we've been on a study of the book of James for over a week, almost 2 weeks. Today's the final installment. Faith works. I'm going to share some scripture, James 4, verses 1 through 12, from the Message translation. Where do you think all these appalling wars and quarrels come from? Do you think they just happen? Think again. They come about because you want your own way and fight for it deep inside yourselves. You lust for what you don't have and are willing to kill to get it. You want what isn't yours and will risk violence to get your hands on it. You wouldn't think of just asking God for it, would you? And why not? Because you know you'd be asking for what you have no right to. You're spoiled children, each wanting your own way. Cheating on God. If all you want is your own way, flirting with the world every chance you get, you end up enemies of God and His way. And do you suppose God doesn't care? Proverb has it that He's a fiercely jealous lover. And what He gives in love is far better than anything else you'll find. It's common knowledge that God goes against the willful proud and gives grace to the willing humble. So let God work His will in you. Yell a loud no to the enemy and watch him make himself scarce. Say a quiet yes to God and He'll be there in no time. Quit dabbling in sin. Purify your inner life. Quit playing the field. Hit bottom and cry your eyes out. The fun and games are over. Get serious, really serious. Get down on your knees before the Master. It's the only way you'll get on your feet. Don't badmouth each other. It's God's word, His message, His royal rule. It takes a beating in that kind of talk. You're supposed to be honoring the message, not writing graffiti all over it. God is in charge of deciding human destiny. Who do you think you are to meddle in the destiny of others? Again, that's James chapter 4, verses 1 through 12, from the Message translation. So what are we talking about in this passage? Worldliness versus godliness. Our lives suffer from no shortage of worldly wisdom. If you've ever been into a bookstore, you've seen the massive space dedicated to self-help or self-improvement. You may have even seen books classified as Christian self-help. But here's the reality. You can't help yourself. You're broken. Apart from Christ, you're spiritually dead. You can't improve on death and brokenness. This is a bigger deal than not living up to your potential or settling for good instead of great. This is a matter of life or death. Worldliness and godliness are both the root and the fruit of the wisdom we live by. False wisdom is rooted in and reproduces more worldliness. True wisdom is rooted in and reproduces more godliness. Our passions and desires are at war within us, and we must fight against them. Pride, boasting, and divisiveness mark worldly people, while humility, obedience, and repentance mark godly people. When we get into an argument with someone, our tendency is often to blame the person we're arguing with before examining our own hearts. The way we view the world causes us to grow in one of two ways. It's either gladness and gratitude or entitlement and contempt. And I hate to say it, but this current young generation, I believe, are the most entitled and contemptuous the world has ever seen. When we learn to spot God's goodness in our lives, it leads to an ever-increasing sense of gladness and gratitude. As joy and satisfaction begin to grow in our lives, we learn to appreciate God's work regardless of our circumstances. In contrast, if we feel that God owes us something, instead of growing in gladness and gratitude, we'll grow in contempt. The only thing we deserve from God is death and eternal punishment. But by His grace, He has given us life. Join me in a word of prayer. Heavenly Father, thank you for the words that guide us in James 4. Help us to resist the temptations of the world and draw near to you. Cleanse our hearts and purify our minds so that we may live in humility and peace. Grant us the grace to submit to your will, avoiding quarrels and conflicts, and to speak words that uplift rather than judge. May we humble ourselves before you, trusting that you will lift us up. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Thursday. Speaking of Thursday, tonight is our members only workshop. Obviously, you got to be a member to attend. So if you've been on the trial for the past week, you should have gotten an email yesterday or today that explains exactly how you can become a member and be in that members only workshop tonight. Let me give you the numbers from around the world. I'm going to start here in the US with the cash markets, or the indices as they're called. The Dow is down 283 points. The NASDAQ is up 122. Basically riding on the back of NVIDIA's earnings yesterday. S&P 500 is up 9, almost 10. Yep, 10 points now. The Russell 2000 is down 9.5. So the markets are divided. We got two of the major indices in the red, the Dow and the Russell, while the NQ and the S&P are in the green. As futures traders, we like to see all four of the major indices the same color, even if you only trade one of them. When you have all four the same color, either red or green, that's when you have better follow through. And it makes the job of getting your goal for the day much simpler. And most days, we do have all four the same color. But yesterday and today, they're divided. So, exercise reasonable caution. In the commodity basket, crude oil down 66 cents, trading 76.91 last. That's a drop of almost 1%. Gold down again today, huge, $44.60. That's almost 2%. Silver down 83 cents, trading 30.66 last. That's a drop of over 2.5%. Remember, when silver drops or rises $1 in price, that's worth $5,000 per contract traded. And again, we are down 86 cents. The Asian markets at the close, the Nikkei was up 486 points, 1.25%. Shanghai dropped 42. And for the Shanghai, that's a little over 1.25%. Hang Seng fell 326. That's over 1.5%. And in the European markets at the close, FTSE down 31, DAX up 11, the CAC up 10. So we had a mixed day in Asia, a mixed day in the UK, and so far it is a mixed Radio Thursday here in the US of A. Now, the S&P 500 and the NASDAQ Composite rose to touch fresh intraday highs on Thursday after NVIDIA's blockbuster earnings lit a fire under optimism that the AI rally has more room to run. The tech-heavy NASDAQ gained 0.8%, while the S&P rose 0.2%. NVIDIA shares popped more than 9% to top $1,000 for the first time after the AI bellwether blew past Wall Street's sky-high forecast for the first quarter earnings. The chip giant also raised its guidance, easing fears that AI demand might be losing steam. Other chip makers and AI-related stocks rode higher on the coattails of the results, with server makers Dell and Super Microcomputer, SCMI, up about 7% and 4% respectively. The NVIDIA euphoria helped the market set aside the interest rate hike concerns that fed the previous day's losses. Stocks had slipped after Federal Reserve minutes revealed some policymakers are open to keeping rates higher for longer this year if inflation doesn't cool as projected. Our commander-in-chief delivered a speech the other day, and he said something quite interesting. He said, I don't understand what's going on. Now, he really said this. I don't understand what's going on. He said, inflation is dropping, but prices keep going up. Followed by a blank stare. Now, you can Google it up. It's, I want to say comical, but you know what? There's really nothing funny about it. So, since we have no control over that, we'll move on. Logic 247, that's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude and gold and silver and euro and bonds. We're in week 303. Over the last 303 weeks, we've issued over 16,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. So some of this has changed, plus there has been additional alerts since the recap. But at the time the recap was done, and of course she'll update it this afternoon, this evening, since the markets opened Sunday night, we've issued a total of 27 alerts. Still waiting on the outcome of 7. That was at this time. Some of them have resolved themselves. They give us 20 actionable alerts, of which 2, or 10%, would have been stopped out, again based on market structure and that very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, 303 weeks is a very long time, but long before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, both of them are designed to help you learn how to read the chart. If you want to trade for a living, it's never going to happen as long as you're dependent upon someone else to tell you when to get in or when to get out. So you start with the logic alerts because they have an entry price, an initial target, additional targets, and a final trade to target. If what you will do is when an alert comes out, simply draw a horizontal line at the entry price, draw a horizontal line on your 30-minute, this is on your 30-minute chart, at the initial target. The initial target is always enough to give you your goal for the day. With the exception of the NQ, it gives you double your goal for the day. And then by looking left for previous swing highs and swing lows, depending on if it's a long or short alert, I give you additional targets or obstacles. You can look at them however you want. But from one target to the next target, that's a window of opportunity. So in one logic alert, you may have 2, 3, 4 windows of opportunity. It depends upon how many additional alerts there are. This is to help you learn how to turn the chaos you see on the chart as a new trader into something that absolutely, positively makes sense. And it doesn't matter what you trade. Futures, stocks, crypto, Forex, ETF, the price flows the same across all markets and all time frames. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock, and we have traders around the globe. First thing you want to do when the report comes out is go to the 30-minute chart of the markets you actually trade. Use the ES as an example. Make note where price is at this time, whether you're there when it comes out or even if you show up later. Go through the exercise. Make note of where price was at the time the alert came out. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. I'll put you on hold for 1 second. Be right back. So if price gets above the 30-minute BBC, that's the green line you see on my chart, stands for bull-bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. Price crosses below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you're looking at. For the purpose of the alerts, it's always the 30-minute chart. Now, with the logic alerts, I look left for you. For the CTAs, you learn to look left yourself. Once you get the logic alerts down, and then you get the CTAs down, guess what? You can read a chart. Something 90% of would-be traders will never learn how to do. So with CTAs, you're learning to look left yourself to spot those potential obstacles, previous swing highs, swing lows, and you're learning how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open, Sunday night, till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to reach the long target. If price is below the 30-minute BBC, it's trying to reach the zone below. I said target, I meant the zone above or the zone below. You always know. We've published the zone since December 14th of 2009, closing in on 15 years. They're published Monday morning at 6:15 a.m. Eastern. Now, once they're published, carved in stone for the entire week. They don't change in any way whatsoever. Once you understand how price behaves and is attracted to the weekly zones, they'll become one of the most important tools in your trading toolbox. Just got to resist the urge to make it more complicated than that. More stuff is not the answer. In fact, the answer is not even in the markets. The answer is in your mind. As long as you know which way the wind's blowing, it's pretty simple to reach your goal. Okay. So let's have a look at today. All right, we put in a new all-time historic high today. 53.68 and a quarter. We'll see how close we can get it. And we'll go with that for now. Pretty close. 53.67, the actual high, the new high today, 68 and a quarter. So we're off by 5 ticks, which isn't an issue when you're looking at a daily chart. Now the low of these fibs go back to October 27th. November 2nd, we got above the BBC. That's the green line. And we were on a tear. We finally got a retracement. We overshot the 24% fib. We didn't make it all the way to the 38. Buyers came in. We got a bullish cross. Now we have a new all-time historic high. Now that may be the high for a while. We'll see. Blue and climbing. Yesterday we talked about the fact that the step line had crossed. So we look for a retracement back to the BBC. So we still have that same dynamic in play, but blue and climbing has gotten directly above price. When that happens, it can become resistance, because it's often an indication that blue and climbing is about to turn to red and falling. Blue and climbing is bullish, red and falling is bearish. So this just may be it. We'll see. I'm not sure what news we have coming out tomorrow, but highest probability, whether it looks like it right now or not, is that we'll see the daily BBC in pretty short order. Now, why look at a daily chart? Doesn't matter what you trade, futures, stocks, crypto, Forex, ETF, whatever you're going to trade. Just spend 2 minutes looking at the daily chart. Identify where major areas of resistance and support are. And look over the shoulder of the institutional traders who actually move price. Institutional traders, because of their account size, are the ones who actually move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So by spending 2 minutes with the daily chart, you get a good idea most of the time, okay? But what have we done? We've gone sideways now for 1, 2, 3, 4, 5, basically 6 days. Yes, we got this little spike right here. Then we came right back to where we were. Remember yesterday, I said, whenever we have a big event, like the Fed minutes or the NVIDIA blowout earnings, when the dust settles, price is often pretty much back to where it was. And I can draw a straight line right through 1, 2, 3, 4, 5, 6 days. So we're not getting as much information from the daily chart as we do on days like this. Again, if you'll just look at it for 2 minutes and then drop to your smaller time frames, your 30-minute and your range chart for execution, over time, you're going to see the results change. Here's the ES 30-minute. Again, these are the weekly trading zones that were issued Monday morning at 6:15 a.m. Eastern. This is Thursday. Vertical line separates us from Wednesday. Then back here's Tuesday. So Tuesday, where do we find support? at the zone. We found resistance at the zone. Then we climbed to the next zone where we again found resistance. Resistance will send the market looking for support, which we found where? At the zone. Support sends us looking for resistance, which we found at the zone. Resistance sends us to support. Support to resistance. And right here was your sign of weakness. The fact that we were not able to get back to the zone. And, well, in came the Fed, right? In fact, we started dropping. In fact, I mentioned this yesterday. We were dropping ahead of the Fed minutes, as if someone had leaked something somewhere, but you never know. Where'd price come to? Well, we got a zone at 5306/5307. Swing low was 5306.75. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. So, the market found support yesterday at the zone, and then it went looking for resistance, which it found at the zone, 5345/5346. We spiked it by 4 ticks. So here's last night's open, okay? And we made a run right up to the CTA target. Consolidated, continued higher, okay? At about halfway to the zone overhead. We had a higher high, then the bottom fell out. Look at this guy. This was the 9:30 opening candle on Wall Street. Dropped like a rock. And where to find support? At the zone. Support sends the market looking for resistance, which it found at the zone. And then on this candle, we traded through the zone. We overshot it. Buyers came in and ran it right back up. $53.41.5 was the high of this candle. The high of this candle was 53.40.75. So on this move back up, we came within 2 ticks of hitting the long target again. And now the step line is trying to cross red and falling. If it does, we'll most likely get a retracement back to the BBC. But it's starting to look a little odd. So if price trades below these two, then it's back to the short target, back to the zone, back to the low of the day, and then possibly back to the low of yesterday at the zone. On the Dow, again, the market finds resistance when we move up to a zone until proven otherwise. And then when we drop to a zone, we find support, which we did on this 30-minute candle. It bounced us, but price continued to drop. If you go look left, you'll find out why buyers came in at this spot. Here's where we opened last night. We attempted a run up, got above the zone, pulled back to the zone, found support, put in a slightly higher high, but and along came 8:30, 9. Here's a 9:30 opening candle. And this is an example of why I personally choose not to trade from 9:30 to 10. That's usually the biggest candle of the day, and for some people, that's the best 30 minutes of the day. Because of the incredible volatility, I just choose to wait. You'll decide what works best for you. So we traded through the short target, and through the zone, and that is the lowest weekly zone this week for the Dow. Now, based on almost 15 years of history, there's an extremely high probability that by close of business tomorrow, price will be back to the zone or above. Is it possible it could close outside of the zone? Yes. It has happened a handful of times. Maybe 2 handfuls. Last night we opened right at a zone and we made a run. Now, only 3 things happen at a zone. 70% of the time is consolidation. 20% of the time is rejection. See, this was a red candle all the way down. But by the time the 30 minutes was up, we got a green candle. Price got rejected at the zone. That's 20% of the time. 10% of the time is the slice. That's this guy. On the 30-minute chart, the 30-minute candle sliced through the zone like it wasn't even there, and then it retraced back to the zone it sliced through and continued in the direction of the slice. Then we retraced back to the zone, 70% of the time, consolidation. Then we made a run right up to the bearish cross. This isn't a true bearish cross, but you can see where it turned right there. And then, just like all the other markets, Wall Street Open was not a happy place to be. Where'd the market find support? At the zone. Bounced it all the way back up to the short target. Spiked it again. Now that is the lowest weekly zone for the Russell. If you look left, you'll see why buyers came in. The step line is trying to cross, red and falling. If it does, then we'll likely get a retracement back up to this zone in the BBC, and then potentially another leg to the downside at 72/73. NQ. Gap higher open last night. With futures, with the indices, you typically only see a gap during earnings season and on Sunday night when the market's been closed for a day and a half. So we had a gap higher open. It ran right up to the target and ran all the way to the zone. That's the highest weekly zone for the NQ. Put in a nice little doji for us, light the heads up, and then we drop like a rock all the way down to previous bullish cross. You have a bullish cross that leads to an extended move. The first time price revisits that area will almost always be good support, and it did not disappoint. The pullback to the VBC holds more often than not, and so far the pullback here is holding. Crude oil. Here's where we opened last night, below the BBC. Plenty of room to get your goal for the day, even though we didn't make it to the short target. Then red and falling turned to blue and climbing. We put in a higher low here. We had a low and a higher low at above the BBC. Then we had the perfect stack all the way up. Price, step line, blue and climbing. Right here, we ran into resistance, right at the target. Got pulled back right there. And then it made another run to the zone, hitting this bearish cross right here. It spiked it, but the zone, in conjunction with the previous bearish cross led to an extended move. Price returned to that area, and it got rejected. And we've got a double bottom in on the day on the 30-minute chart. Just now getting the bearish cross. So I suspect we will see this lowest weekly trading zone Possibly today, maybe tomorrow. On gold. Here's where we opened last night. Ran up to the zone, resistance. Resistance sends us looking for support. So down we go. We hit the short target, consolidated a bit, then dropped to the zone, support, which gave us a nice bounce up to the BBC. Remember the pullback holds more often than not. And now, here we are. If we take out this low, then we've got all this area down to the lowest weekly zone, 2285/86. It's like reading a newspaper or a great mystery novel. Spend time reading the chart. Pretty soon you'll be reading it in real time. Okay? Market does the same thing over and over again and again every day in just a slightly different way. You'll start to pick up on that. You'll start to say things like, I've seen this before. Well, when that happens, this usually happens. And so you'll find your market truths. I give you market truths, but they don't really become your truth until you prove it to yourself. Okay? Work on that. Silver. Silver dropped right to the short target. Bounced off the zone a couple times. Support, ran up to resistance at the zone. Resistance sent it back to support at the zone. Just got a bearish cross. And Michael is here, so we're going to switch over to him in just a second. We opened and consolidated at the zone, dropped to the short target, then made a run all the way to the long target. We spiked this zone, this high right here. And then that 930 open that just killed every market, almost every market. Huge red candle. So now where do we sit? Well, as we take out this low, then we're most likely headed to this low, to the zone. So there you have it. Okay, Mike.
All right, I will grab it, bring it over here, and there it is. Here it is.
All right, looks good.
All right, let's get cracking then. Good afternoon, everyone. Today is Thursday. Partners meeting tonight at 8 p.m. Today is Thursday, the 23rd day of May. Can you believe it? 23rd day of May already. Now, if you have not taken a free trial with us and you want to, then go here to mytradingiq.com and click right here. It is going to get you, that is going to get you to this registration page, which we'll have to load. And once once you get here, all we ask for is your name, your email, and your phone number. All right, down here at the bottom. You can give us your NinjaTrade machine ID if you have it. You can give us your TradingView login ID if you have it. Click the register button. Once you hit that register button, you'll be sent everything you need to get into the room in the morning. Now, if you give us that information down there, we will notify you as soon as we enable all the indicators for you. Once you get that notification, then you should simply go here to trading platforms at mytradingiq.com, click on trading platforms, and use whichever thing applies to you. All right, watch whichever video applies to you. Get that going because you want to get that going at the beginning of your trial. All right. Now the slow day today. We had some good volatility this morning, but I missed all the volatility this morning. My mind was somewhere else, and I ended up missing most of the volatility this morning. We did get the goal pretty early on, 2 trades this morning, but then I tried to do a couple other things at the same time, and I missed some really good trades on the NQ and on the Russell and on the YM. I didn't really miss too many good trades on the ES, but well, anyway. I think I already said this, but I'm going to say it again. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I have to say that every time I bring it up. Today is the 23rd day of May, 2024. We made 20 ticks on the NQ. We lost 6 ticks on the the Russell. We lost 6 ticks on the Russell, right? Yeah. Lost 6 ticks on it. Russell made 1 tick on the YM and 3 ticks on the ES. Put us at 112.50 on the morning session. Today it took 7 minutes and 2 trades to get to the goal for the day. And again, this was one of those days. Today, yesterday, and Monday were days where I should have quit when I got the goal. But I did quit on Monday where I got the goal. But today and yesterday, I ended lower than when I had the goal because both days we got the goal on the 30-tick trade on the NQ. Anyway, it took 7 minutes and 2 trades to get to $2,550 this morning with 17 contracts on. Now on the month we're at $5,180 when it's like half of last month. And we have 5 business days left this month. I mean, it could change a lot, but I don't think it's going to change that much. We're not going to get anywhere near last month's. That's okay. We're still doing really well. We're averaging $304 per contract per morning session. Last month, we ended up averaging $488 per contract per morning session. On the year now, we're at $397.09. And at the end of the last month, we were at $411.09. So we're only down a little bit on the yearly average. Now, if you were to add 1 contract per month, follow the 24/20 blueprint and add 1 contract per month, starting this year, you'd be 5th contract now. You'd be averaging $1,178 an hour. Now, yesterday I made a comment because I said 1,100. I didn't count. It was 60 yesterday. I didn't count the 60. So I just want to do this, just to do the math for you. Okay, that's $60 an hour that I discounted yesterday by accident, times 40 times 52. It's $124,000 a year. Now, this 1,178 times 40 times 52 is 2.4 million. Now, we're not saying you're going to sit there and you're going to average $1,178 if you work an 8-hour day every day. You won't. Let me just tell you that. You won't. But if you get in here and quit trading when you get your goal for the day, and let's say you work 5 hours a week, and you do 1,178 times 5 times 52. That's $306,000 for working 5 hours a week. Now that is a realistic number, and that's starting with 1 contract. And if you quit adding contracts the rest of the year, that's where you'd be. If you could maintain that, do that regularly, consistently get your goal day after day after day, right? If you worked 8 hours a day, you would not maintain an average. Now, you might do better, you might not, but it would not be that average. It seems the more it takes me to get my goal for the day in the morning, like this day here on Monday, we were over $6,000 per hour until that day happened. And then we dropped all the way down to like $5,900 per hour. And it took 3 more days for me to get back up to 6,000. All right. So yeah, the 24/20 blueprint is the way to go. Get your goal for the day and quit trading. That's what I'm trying to say. All right. So we had some news out today. Let me cover that really quick. We had in the pre-market, initial jobless claims were off just a little bit. Not a big deal. 4-week jobs average, that was off just a little bit. Again, not a big deal. This was the high impact stuff. All right. The global manufacturing PMI flash and composite PMI flash and global services PMI flash. They were all higher than expected. Didn't do anything for the markets really. New home sales came in worse than expected. Every one of them. And this was a huge miss. New home sales month over month.
And I think that's what everybody should really focus on.
Yep. Right there.
Everybody needs a place to live. And these big builders, they are no longer building master planned communities where you buy a nice home in a gated community. They're still building them, but they're not building them to sell. They're building them to rent.
We have right around me right now on the street adjacent to my neighborhood. There's 1, 2, 3, and then one over by the golf course and another one over on Falling Creek. So we have like 5 of those neighborhoods, or 5 of those. Well, there are neighborhoods that they're building, but they're not building them like my neighborhood where everybody has, a house. It's big, single family house. It's got room and a yard and all that. They're building them like these things they passed the town apparently, some politician passed something that allows you to build these condos or these things that are like
Yeah, they
right
call them
next to each other.
high density dwellings.
Yeah.
And if you want to borrow a cup of sugar from your neighbor, all you got to do is like just reach out the window, and your
Yeah.
neighbor can literally hand it to you. I mean, there's barely room to walk between the houses. It's crazy.
Yeah. Yeah. There's this one guy put a shed in his backyard. He had to have a crane put it in there because the shed is almost as big as his whole backyard. And and he had to have it lifted up and put over the fence.
And does the top of the shed stick up over the fence?
It does actually,
And
just a little bit.
a lot of HOAs, they would tell you take it out or dig a hole so that it doesn't. Just depends on how how vicious the HOA is. And
I know the thing about it though is they can't sell those houses. It seems like they've all got for sale signs on them, and the occupancy of the one on Falling Creek, the occupancy there of the homes that they probably built about 15 of those homes there, and only about half of them are filled. And the one right across from my church, they plan on building 120 over there, and they've only built about 10 so far, and about half of those are filled. And the one that they're building a little further down the street on the other side of me, I don't know how many they're going to put in there. It's a huge thing. They've been working on it for 2 years, just getting the ground, just getting it prepped.
right.
They haven't built a single home there yet, but I can't imagine that that's going to be a thing. And over by the golf course, they've been working on that for 3 years now. And
pretty soon those will turn into rental properties. Investors in China or somewhere will buy them up sight unseen and then hire somebody in the U.S. to rent them out for them. And that's when urban decay is on the way.
Yes, I plan to be living in the mountains by then. I'm close enough to the mountains now. It's not that big of a stretch. On the mountains, in the mountains and the lake at the same time. We have that here.
Cool.
So anyway, that was we both got down that rabbit hole, Dwayne. The new home sales was a huge miss, and that if you have like a HELOC, with the way that interest rates are going up, and the values are going to start dropping because they can't sell the houses. Just what it looks like right now. I don't want to be doom and gloom, but that's what it looks like right now. Anyway, that's the news for today. So let's get into the actual trades that we did. All right, I know I totally got sidetracked on that, but that's okay. Let's get into the actual trades that we did. Oh man, I didn't bring up the question box. So you guys may be making comments in there. I don't see any. Okay. And one other thing I want to put up here is the YouTube. That's what I was trying to do. YouTube.com, CFRN. There it is. All right. So I went through. I didn't go through any of the trades yet today. On the YM, we had just one trade somewhere in here. We had one trade, and it gave us one tick right here. One trade for one tick. Now the reason I had these pivots drawn out here in the YM is because I had gone to a 30-minute chart. Now, on the 30-minute chart, the last blue arrow was a long, and what I was looking for in here, I was looking left to try to find a good target number on the downside from the 30-minute chart. And if you guys remember this morning, that number was 405. 405 is what I found. Looking left, I put these pivots on from the context PP, so I could just go way back here and see where that next one was, and see it right here. This pivot right here at 405 was the next one down. That's what I pointed out this morning. That's why I was able to use these for that, because the way that things had worked out, the long trade being the last thing here, the target's only going to go from that long blue arrow. All right. If we had a short blue arrow, it would have given us all those targets all the way down to that number. But because we had a long, I had to go and look for it. That's what these things, these pivots, if you want to turn them on, you can turn them on and off right in here. Right here. Okay, if you have the context PP, then they're a useful thing to have on your chart. Sometimes. Normally you don't have to have it because the lines and everything else, the target's going to be showing all that stuff for you. But if you wanted to see something like I did this morning, if we kept dropping on the YM, if it was going to keep going down, then that's where it was going to go down to. Now, we only had the one trade here on the YM this morning. So I'll move off that and get into everything else. I want to go through a bunch of things that I went through this morning and stuff that I went through yesterday. And I'll show you all that in just a few minutes. Okay, let's get through this now. The Russell, we had 3 trades on the Russell. We had a stop out and then 2 small wins. All right, so we went from -10 on the first trade right here, -10. Now, I didn't realize I was in a weekly trading zone right there. I wouldn't have taken that if I'd known. Actually, I did realize I was in a weekly trading zone. I thought I was getting out of the zone. I should have had my stop at break even, but I didn't. I got a -10 on that. I remember saying I was in the zone and it was a risky thing to do and I probably shouldn't have done it. I think I said that at the time and I did it anyway. And I stopped out. And I got a +2 on that one and a +2 on that one. That put us at -6 on the Russell in the morning session. There were a few more trades in there. We had some good volatility this morning. I mean, I missed some really nice trades. If you go back here and look at this. This one right here. I missed that really nice trade this morning. The green arrows through there. This blue arrow right here, I missed that. I missed that. And that. And this was in the break right here. A couple of blue arrows here during the break, neither of which worked out. Okay, that was a Russell. Now the ES, we had a few trades on the ES. All little tiny trades. We had a break in there. I think we had somewhere else. There it is right there. We had a +1, then a break even, and a +2 to get us to 3 overall on these. We had a little more volatility today on the ES, a little more action than we had so far this week. So it was good to see a little bit of movement on the ES. Now the NQ, we had the majority of the trades on the NQ, as we usually do. Let's scroll back in here. Now, those of you guys that were watching yesterday afternoon, I'll get into it in just a minute, but let's go all the way back to the beginning here, okay? All right, there we go. All the way back to the beginning. Let's move this down and over. This was our first trade on the NQ. That's right here. I picked up 30 ticks on that one. Then the next trade that I did was right here. I stopped out. I was telling myself I shouldn't do that because it's flat. The outer bands are flat, but I did it anyway, and I stopped out -20. So I was at -10 at that point. And the next trade that I did was right there, break even. Then another stop out right there. That put me down to -10. And then the next trade was a break even right there. And this one right here, I had the sell stop limit order waiting on this. I thought it was going to pull out of the overbought here and give me a green arrow, but it didn't. So it failed me on that one, and I got the 30 ticks on it. But this one here was the actual proper trade to take. This was not a good trade here because it didn't come out of the overbought. I had my sell stop limit waiting there, so it did fill me on the sell stop limit on that trade. And so I was in for the blue arrow trade as well. And I got the 30 ticks on that. But because it hit the black line here, it had to come out of the overbought. And it didn't come out on that bar. It came out on the next bar. This bar right here didn't come out. It came out on that bar and turned it into a blue arrow. But I did get 30 ticks on that. And I believe that was the last trade that we took. There were some nice blue arrows in there that I missed. One there, one there. Look at that one right there. One there. Hey. I got something here and I didn't write it down. I picked up some profit right there and I forgot to write it down. I don't know what I got. I can go back and look and put it in. What time was it at? It was at 10:52. Yeah, let me go see if I can find that. Hold it. 10:52. 10:51, 10:52. Right there. It was a sell on the NQ. 50. Wait a minute, sell on the NQ right there, 53 something. What does that say right here? It said I sold at 53 something. That must be the right one then. What is that priced at right now? 852. Huh. Okay, well, it doesn't really matter. I didn't count it anyway. I didn't count it on the paper. I did get some profit, but I didn't count it on the paper. There were some nice blue arrows though. There was one there, one there. This one going right into the zone you wouldn't take. And we had a purple arrow there during no trade zone. Here that worked out well. This is all during the break right here, guys. A blue arrow there that would have stopped you out to the tick, and a blue arrow here that might have given you a break even. If not, it would have stopped you out at this point. So there was some pretty good activity this morning. Okay, we ended on the NQ with plus 20. I think we had more than that, but I haven't figured out exactly how much from that last trade we got. Now, if you for the live stream, let me just say, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. That is going to bring you to this registration page. I know this is all blanked out right now because we only have 1 day left in this week, but we'll have a new one of those up there tomorrow morning. If you sign up for the free trial today, you will be included in the free trial next week. You'll be notified all the information and all the changes. You can see the password this week was probability. It'll be something else next week. Remember, next week is a short week. For those of you guys that are in here, we are not going to be sending you out weekly trading zones and the information to get into the room Monday morning. That information will be coming out Tuesday morning. Okay, it is a holiday on Monday. So if anybody sign up for the trial this week, you'll get Tuesday through Friday next week as well. Okay. And yeah, so let's get into the actual trades. Okay. I did get into the actual trades, but we get into the actual trading, but I want to go through one thing really quick. Yesterday, when I was looking at all this stuff yesterday, we were looking at the NQ, and at the time we were right here. Now let's see if we can put this up. Okay, this is when I have a little problem. Earlier in the week, yesterday, we were right about here on the 1 o'clock candle. Okay, and I was using this, not that leg length, this leg length right here was our measuring stick yesterday. Okay, and I was saying yesterday that if it goes down, this is where it should go. And if it goes up, we're using this right here. This is where it should go. All right. I really thought it was going to go up yesterday, not down. You know, when all this stuff came out at 2 o'clock, this is what sent it down. When the FOMC meeting minutes came out yesterday at 2 o'clock is what sent it down. I really thought it was going to go up, not down, but I didn't know. I said that. I said, I don't know. Yeah, we were trading right here at the BBC, at the weekly trading zone at the BBC, and we had the bearish cross right here of the black step line over the MA1, bringing it down to the BBC, which usually is going to be a bounce at a weekly trading zone. But I didn't know. I said, if it goes down, it's going to go down to here. If it goes up, it should go up to here. Well, it did both. It went down to there. And then at the close yesterday, when NVIDIA released their earnings, which were way better than expected, and they're having a 10-for-1 stock split, it bounced all the way up into this area. And then it formed kind of a base right here, all right, for the next leg up. And if you look at that next leg up, it goes right to here, right? And if you look at the next leg up after that, right there. So what happened here is it blew through everything, really, using this leg length. It pretty much blew through everything. So you have to look at the whole picture. And looking at the whole picture, you use this leg length. All right. Where I grabbed that from? I don't remember exactly where I got it, but using that, it puts where it should go on the upside all the way up here. Now this morning, those of you guys that were in the room this morning, you saw me drawing all this in. I drew in this right here. I drew in this circle. I said, it's going to come up here. It's the BBC is going to be there at the time. You have the MA1 BBC cross right there. You have the midpoint of today's action. I said it's going to have a hard time when it gets there. If it's going to bounce off of something, right there is where I think it's going to bounce off of. And I drew that in there this morning, and you can see that's exactly what it's doing. So what should we expect now? Right? Because now we have lower highs and lower lows, right? So this stuff that happened yesterday, I wasn't expecting this to happen. But if it did happen, it was a perfect indication here of how far it should go down. Right down to that weekly trading zone. That was, and this thing that I'm carrying around right here, it's not some random little line that I drew. I got that from back here a few days ago, all the way back here, I think, a few days ago. Remember I drew this in the other day too. When did I draw that in? I must have drawn, I don't know. I don't know when I drew it in, but the number there was 19,131. Did we ever get up to that yet? Not yet. Okay, hey, but look at where that goes. I didn't even realize that. Did I just randomly place that there? I think I did. No, it goes over here. 19,131. I didn't even realize that. That lines up perfectly with everything else that we've done in the past week. All right. So I know I'm saying a lot of words here, but let me try to make it make sense to you. Okay. That smaller line that I've been using is measuring all of these, right? Then that bigger line came in and it measured this, right? And that smaller line ended up going down like this just now. It ended up going down like this. And that bigger line came in. And this is what that bigger line is measuring. So right now, they're bound to come to some point down here where they're both gonna go back up. And this leg length right here from yesterday's lesson plan is what we should see. Okay. Now, if I bring all this stuff back up, I know this isn't trading right now, but it's good information, I think, for you guys. If I bring all this stuff back up, this big leg right here, this one is what I'm talking about right there. Wow. I just randomly drew all that yellow stuff, and look how well I drew it. It's right there is what I'm talking about. All right, that leg and that leg. That's what you should see. The pullback is this pullback that's happened right here. All right. And well, this pullback that's still happening right now. But there's another one. That's what this blue one here is. There's another one that's even bigger than this one. Okay, if I crunch this down so we can see where I drew that from, it goes from down here. Now this one here that I drew started way over here. Okay, this one right here, this big one that I drew, started way over here. Do you see how the market is just, it's repeating a great pattern here for you guys, for all of us. It's giving you a great indication for anybody that's buying long term. It's going to go up. It's going down right now. These are great buying opportunities right now. Great buying opportunities right now, and it's going to go up eventually. I mean, I say that because markets have to go up. They can go down in the middle. I mean, in the midterm, but eventually they're built to go up. These indexes, they're built to go up. They're not built to go down. So they will go down over time, but they will go back up. They'll always recover and go back up. And this is what it looks like it's trying to get up to right here. And everything fits perfectly. All these little pieces that I drew in here, I drew this and this. I don't know when I drew it, a while back. But all these little pieces, as they've been coming together, I've been able to show you what I think is going to happen and what, and then what does happen. And I don't know. Does this make any sense to you? If you're thinking long term, this is a good place to have your eyes set right there. Right, 19,135. And that should happen within the next week, probably next week or so, maybe 2 weeks. Actually, next week is the end of the month. So we're going to have this week right here is going to be full of news. We might have something on Friday next week, but this week right here is going to be full of news. Let's go check that, see if they moved anything up. Hang on a second, let me minimize this and go here. Did I talk right through my time? I didn't, not yet. Let's go to next week and see. Friday, did they give us any high impact news on Friday? They did, they moved everything up on Friday. See that? They moved everything up to Friday next week. So we have a bunch of high impact news at the end of the week next week. So if I, and this is just me, if I were thinking long term being 2 weeks, I'd be looking for some opportunities to buy some call options down here. And I suppose that brings me to something else that I can show you. If you're interested, I can show you this really quick. It's not a CFR Breeze, but it's in here. Okay, the TV trade stuff. There were some call options yesterday that I went over, the meta that I went over yesterday, where if you took the trade from the beginning of the morning and you got out by the time I was doing this yesterday afternoon, it had gone up, what did I say? It had gone up 14.8%. And then at the end of the day, there was this AMD that I posted in here, and I posted a great buying price for it right there, the AMD. The 167.50s is what I went with, 167.50s. And you could buy them at 315 at that point. And then the risk reward on that, it was over 4. So to get to the first target was over 4 times the risk coming off of the TV trades. And this morning, we were able to sell those for $4.90 for $490. So we bought them for $3.15 and sold them for $4.90 for a 55% gain overnight. The stock itself went up 3.1%, which is also great. All right, the underlying stock went up 3.1%, which is also great. But I just wanted to show you that. Opportunities, just opportunities. All right. I really got sidetracked and placed a single trade. I wanted to show you all that stuff because I thought it was important that you see how, Dwayne, well, we've both been saying for years that the market is fractal in nature, and everything I just showed you were 3 different levels of, what you call it, fraction. The level that I've been using, that small one, and then the next level up, the bigger one, and then the next level up, the bigger one. It's fractal in nature. All right. So let's see if we can get one trade off here. We had a green arrow here that did not put in lower swings. We can't take anything there. We do have a lower swing here. We had a green arrow here that put in a nice lower swing, so we can't take anything there. We have a black arrow here, so we could take something here if the Russell pulls back, and we have nothing going over here. We have to hit the ribbon to get a trade over here on the YM. So it's possible we could get a trade off, right? If we had put in a lower swing after this green arrow, we could look for a trade here, but we can't because we didn't. Now Bitcoin was taking a beating today. I thought, go look at that really quick. Yeah, see, it's taking a licking right there. What else are we looking at over here? SPY was the last thing we looked at. The SPY, I think it gave a long indication. Nope, it gave a short indication in here, and then it gave another short indication. It almost gave a long indication at one point. It gave a potential long soon right through here. It did give this short, and then it gave a potential long soon right through here. And then it gave another short right here. So I took a shot of the options when this one triggered. I haven't had time to really do anything with it or post anything about it. But if you guys are not in the TV Trades Telegram channel, you should get in there. I think It's got pretty good information in there most of the time. All right, we did put a lower swing in here on the NQ now, so we can take that short trade if it triggers. It's off the ribbon right now. That's good. That will work. It is off the black part of it there, so there's the down close. Now, I gotta hang on. I gotta refresh this and see if we have an arrow or not. No, we don't, because we hit the black line there. We're not in the overbought, and we hit the black line. That's why we don't have an arrow on that. Okay, now we are in the overbought, so if we get a down close now, and we didn't get a down close yet. We could still get a green arrow now. We're not gonna get anything. Not gonna get anything there. We could get something over here on the Russell. The Russell is a possibility, and the ES is a possibility. Okay, nothing on the YM and nothing on the NQ right now. We've got a high here, 66.7, so you'd be selling 65.9 on the Russell, 65.9 on the Russell. And we've got on the ES, we've got a high of 20.25. We're gonna have a low of 18.25 on that one. Okay, 20.25 down to 18.25. We've got a high here, 66.7, 66.7. Why did I do that different a minute ago? 66.7 down to 66. No, 65.9 was right. 66.7 down to 65.9. That's what I'm looking for. That's the trade there on the Russell. Here it is. That's the trade on the Russell. I want to make sure my stop is in the right place. It is not. It needs to go right there. The ES could have a trade here too. We need the down close on the ES. And there it is on the ES. Okay. Let's see if we can get into that. Here we are. We're into that one too. All right, we have nothing on the YM and nothing on the NQ, but we have a trade on both the ES and the Russell. Now the Russell's going to break even after 4 ticks in profit. The ES needs to get 4 ticks in profit to go to break even too. The Russell's going to go down to right here. I don't know how many. That's 10 ticks. Okay, that's 10 ticks. And that was part of today's lesson plan. Though I went over that pretty quickly in the lesson plan today. We need 4 ticks in profit over here on the ES to bump that stop to break even. We haven't gotten there yet, I don't think. Okay, and the ES should get down to 1650. 1650 is what the ES should get down to. Now we're out of break even on the Russell, and the ES is not given 4 ticks in profit yet. It's got down to 1725. It needs to get down to 17. Okay, but it should go down below 17 to 1650 is what we should see there. Okay, let me do that in this, and this, and this, and that. Be in the yellow. All right, a couple more ticks, and we will be in good shape. Nothing over here on the NQ, guys. Nothing there on the NQ. This is where it should get down to, right there, 1650. That's the number. I'll put a target there. Maybe it'll draw it down. I'll add to the total. I don't see any questions in here, and let me see the live stream over there. There are no questions over there either. Okay, so it is now 127. We're just waiting to see what the CS trade does here. Don S, are you out there right now? No, Don S is not out there right now. And we ended up stopping out on that. That's it. Mike C, I didn't see you in the room this morning. Maybe you popped in for a few minutes, but not the whole time. All right, so we stopped out on the ES trade, sadly. And That's all I have for trades right now. We don't have anything else to set up for a trade right here. Not yet. Okay, we should have put in a lower swing from this, and I think 1850 down to 1725. If I had gotten a better fill on that, then we'd have had our stop at break even. But again, that's the problem when you get to a lot of contracts. You get slippage. When you get slippage, you don't move your stop to break even in the same place as you would if you had one contract on. You can see that in here where I started, when I started to trade like more than 10 contracts, the time it's taken me to get my goal for the day, the time spent month by month getting my goal for the day, it gets a lot bigger. Like, 1,879 minutes to 1,879 minutes in this month compared to, and that was what, March, April of 2024, we spent 1,879 minutes getting the goal. Up to 18. I'm sorry, that's not true. April, the total at that point was 1,879, but for the month of April, we spent getting our goal 371 minutes. But you can see these here are all 499, 542, 467. Do this, take the 1879. Let's do 1879 divided by 4. So we're averaging 469 minutes a month getting the goal with 13 or more contracts. And if we go back to the same period the year before, we'll just add these up. So average 469, and this is 183 plus 232 plus 128 plus 144. Was that divided by 4? Bang. 171 minutes versus, what did I say, 400 and something? 469 minutes. It's harder to get your goal when you have more contracts on. When you get way more contracts because you get slippage and you got to make up for that. And you end up getting stopped out where you wouldn't normally get stopped out with 1 or 2 or 5 contracts. Okay, it's worth noting that the reality of the situation is that and anyway, I run over my time. So if you have not taken a free trial with us, go here to mytradingiq.com and right here, click on purple button. No credit card is required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill it out and give us your name, email, phone number down here at the bottom. If you have Ninja Trader, give us the machine ID. Do not give us your Ninja ID. We need the machine ID, not the Ninja ID. And here, give us your TradingView username. Do not give us your email. Your TradingView username is what we need there. Sometimes people give their zip code down there. I don't know what happens when they do that, but anyway, that's all you need to do. All right, when you do that, you'll be sent everything you need to take the free trial, to get into the room, to get the indicators indicating, and all that stuff. All right, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Okie Recap of the morning session.
This morning, it took 7 minutes and 2 trades to get to $2,550.
Good job.
Thank you.
Okay, guys, we made it through all the markets. One we left off on was the euro. Let's take one last look at the daily. All right, this is what we were talking about earlier. See, when blue and climbing gets directly above price. Yesterday, we were talking about the step line had crossed blue and climbing. So we were looking for a retracement back to the daily BBC. And then today's high, blue and climbing had gotten directly above price. When that happens, it's usually on its way to becoming red and falling, which is bearish. So, could we drop all the way to the BBC today? Well, that would be quite a drop. But could it be by tomorrow? Yeah, it sure could. Now, the low of yesterday Yesterday's low, 5306.75. Now we have a zone at 5306/5307. So if we trade below that zone, then right now 52.52 is where the daily BBC is. So 52.52 be way down here. Okay, that's the lowest zone for the week. So I don't suspect we'll drop that far, but for us to take out yesterday's low, which is right here, remember the zone's 5306/07. So as we come down, we expect it to be support as it was yesterday. But if it trades through it, then the next zone is at 52.87. Then 42. And that is the lowest zone for the week, 42.43. So one last look at the daily. Okay. The low so far, 58.15. Yesterday's low, 5306.75. So I think the potential for us to reach yesterday's low by the end of today is certainly reasonable. We will know at 5 p.m. Eastern today. Reminder, Thursday, members only workshop tonight if you've been on the trial. You should have gotten an email yesterday or today. It tells you how to become a member. If you didn't see the email, check your spam box. Go to mytradingiq.com. Give us a call at 949-42-EMINI. Or just send an email to support@cfrn.net, and in the subject line just put, I want to become a member. We'll get back to you. We'll get you all squared away so that you can be in the members only workshop tonight. As a passport holder, you get 2 hours of live training in an interactive environment every trading day. Plus, you have access to unlimited one-on-one private mentoring, strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again, day after day. As a passport holder, you'll also get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and again, you'll be able to attend the members only workshop every Thursday night, and you'll get golden key that opens the private channels in Telegram. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Now, yesterday, our good word for the day was navigating life's losses. Ready? Part 2. Ecclesiastes 3:2. There's a time to be born and a time to die. Researchers at the Colorado Institute of Grief offer us this helpful 4-stage path to recovery. Stage 1, shock. Our initial response is one of denial and disbelief. I can't believe this is happening. There's a numbing of our senses, a God-designed natural anesthesia that buffers the early blow and allows us time to gather our coping mechanisms. Stage 2, protest. We feel anger and resentment against God, yet we feel guilty for blaming Him. We may blame ourselves, the doctors, or the patient, and question God's love and faithfulness and even bargain with Him. If you will just do a miracle and bring them back, I will fill in your own blank. Stage 3 is disorganization. Everything comes apart at the seams. The lifestyle we knew and loved unravels. The dreams we cherished evaporate. We feel hopeless, powerless, and lost in a strange, empty universe. Secondary losses may loom. Financial insecurity, social dislocation, depression, loss of concentration. We're convinced that life will never be normal again. We survive moment to moment, afraid to anticipate the road ahead. Then comes stage 4, reorganization. Unrelenting grief gives way to waves of sadness, varying in frequency and intensity. We begin to accept and accommodate our loss. The energy we expend on grief work becomes available again, enabling us to adjust to the demands and opportunities of our new lifestyle. Slowly, we reemerge and take hold of the reins again. The process will take many months, and full recovery may take years. But God promises it will come. In Ecclesiastes 3, we read that there is also a time to heal, build up, laugh, dance, and gain. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.